Hi, everyone. Welcome to the Preservation Resource Center's class for today, June 3rd. We are so happy to have everyone here today. And we want to welcome everyone for coming today to the class. Today we are going to learn about homeowners and flood insurance and from Alyssa Bourgeois, who is an incredible expert on the topic. But before we do, I just want to thank everyone who's watching. I'm going to thank Stephen Richard Parnes for sponsoring the PRC's online classes. We've been trying to do as many classes on a wide variety of historic preservation topics as possible while everyone is stuck at home. And we hope to be providing you not only wonderful fodder for, enjoying our beautiful historic New Orleans neighborhoods and architecture, but also really practical information that helps you own and maintain and live in your historic New Orleans house. So thank you to Stephen Richard Parnes for making that possible. Thank you also to all of our members and everyone who supported us on Give NOLA Day yesterday. We are so grateful for all of the incredible support and the members who make our work possible. If you're not yet a member of the PRC, please consider becoming a member of the PRC. Members not only make the work that we do possible, members are making this possible right now for all of you to learn more about your insurance and hopefully save you some money and protect your historic property and your investment. Members also receive great perks like home delivery of Preservation in Print magazine. It's an award-winning magazine that is a fantastic resource on historic renovations. And we are so grateful to our members who like to read the magazine. Members also receive discounts and perks like exclusive member events. We do them in person, obviously, when we can, but we are also looking at exclusive online member events to be able to see historic buildings and renovations that you would never see otherwise. You can buy PRC merchandise if you'd like to buy a wonderful coffee table book that we put out last year called Building on the Past. That is a gorgeous and incredible book put out by our communications team. And we also have cheeky t-shirts and all sorts of merch on our website, prcno.org. So please do consider that. Without further ado, I want to turn this over to Alyssa, who is going to teach us more about insurance. And Alyssa, if you want to share your screen, that should work.
Okay, perfect. Can you hear me? I just had to switch over to the computer audio, so I want to make sure it's good.
Yep, we can hear you.
Okay, perfect. Let me get my screen on real fast. Can you guys see that?
Not yet.
Okay. Okay, what about now?
Yep, we can see it. That looks good.
Okay, perfect. One more second while I get the rest of this up real fast. Okay, perfect. So as Serena mentioned, my name is Alyssa Bourgeois. I'm with Eustis Insurance, and I handle everything from homeowners, flood insurance, any type of residential insurance. But today I really want to talk to you guys about homeowners and flood. I would love for y'all to ask questions because that definitely helps me to get more into detail. But I'm going to try to do my best to give you kind of an overview of homeowners first, and then we'll go into flood insurance next. So that being said, one thing that I get asked a lot is people call me and say, look, hey, I need homeowners quotes. One thing that I always like to clarify is there's a very broad variety of what you can get on a homeowner's quote. So essentially that's like walking into a Kia dealership and a Mercedes dealership and saying, hey, can you give me a quote on a car? They're two totally different things. They're both going to get you where you need to go, but you can have a policy that's fully loaded with a lot of bells and whistles, or you can choose to strip down your policy and have what you're comfortable with. So definitely like to start off and just mention that because I don't think a lot of people understand that you truly can customize a policy and tailor it specifically to what you need. And that's really important because I know cost is a huge issue here in New Orleans. We're coastal, we're dealing with wind and hail, hurricane, flooding, you have a lot of expenses. Our auto insurance is the highest in the country. People absolutely want to look for ways to curb that expense while at the same time making sure that they're covered. So that being said, the easiest way for me to do this is to kind of walk you through a homeowner's quote, walk you through these coverage limits, let you know how they came to be, and then let you know things that you can customize. So if you're looking at this quote here on the left, this is just an example of one of the carriers that we work with. There are many types of insurance companies and carriers. So Eustis Insurance, which is a part of Marsh & McLennan, we're an independent agency, meaning we have access to a ton of different homeowners carriers. It's like you're walking into the mall and you can choose from any of these stores. You're in the same place. So as an agent, I can work with many different companies. A little bit different if you choose to place a call to a captive insurance agency like a State Farm or a Liberty Mutual. They're only going to be able to provide you with their brand of quoting. So this is one of our brands, essentially one of our markets. So if you're looking at that chart there, you're going to see where it says dwelling, 423,000. So it's important to note that every dwelling value is going to be totally different. It's based on the customizing features and the specifics about that property. So what we do when we're working on a homeowner's quote is we take all of the details about that location. A lot of times I'm working with realtors and lenders for a client who's purchasing a home. So we have access to MLS data, to appraisals, things that are going to provide us with that information. So I'm going to show you here how we calculate that replacement cost coverage. Here's just a sample of the specific house that we're working with on this quote here. You're going to see it's got the address, it shows it's a single family, shows your living square footage, how many bathrooms, the type of siding, the flooring types. All of these factors go into what's called a replacement cost estimator. And this is the software that we use to determine the cost to rebuild the structure if you have a total loss. So here's a sample of that estimator here. You can look through this and you can see, okay, we have the year built as 1919, frame construction, it's one story, there's no garage or carport. All of these factors are what's determining that rebuild cost, because it's important to note that when you're purchasing a home, the purchase price and the rebuild are going to be very different numbers. For example, if you see here, the purchase price on this house is $700,000. The cost to insure the structure itself is only $423,000. So she's paying a lot for land value to live here. This is on Patton Street, uptown, prime area. A really good way to think about replacement cost is if you were to imagine a contractor building the same exact house on St. Charles Avenue or building that same exact house in Laplace. That dwelling rebuild number right here under your dwelling value, that's going to remain the same because the cost to rebuild that structure after a total loss is going to be the same, regardless of whether it's in Laplace or on St. Charles Avenue. The purchase price is what's going to be a lot different. So St. Charles Avenue, you're obviously going to have your land value there. Your market value is a lot higher. That's why your purchase price tends to differ from your dwelling value. So this is something that I like to make sure people are aware of. I don't ever want somebody to think we're insuring half of the house. You know, why do you have a $423,000 dwelling limit when the purchase price was $700,000? That's the reasoning behind it. So once you have that dwelling limit there, the rest of these coverages will initially default as a percentage of that. So if you're looking to the right, you're going to see your other structures limit. This is for anything that is permanently detached from the home. So anything from a detached garage, a detached shed that's built permanently on a foundation, a fence, a swimming pool, anything that's not permanently attached to the roof line is going to fall under this other structures limit. Another thing a lot of times people will say is, hey, look, I only have a fence in my backyard. Not a problem. That's something that you can definitely customize with most companies. There's no need to pay for 10% for other structures if you truly don't have that much in your backyard. So that's always something to take a look at on your homeowner's insurance policy. The limit to the right of that is your personal property limit, also called your contents. This amount is initially going to default as 50% of your dwelling limit. That's where this $211,500 comes from. This is for any movable property. So anything from furniture, clothing, pots, pans, any appliances that are not permanently built into the dwelling. So things like washers, dryers, even your refrigerator, if it just unplugs and you could essentially move it around, it's going to fall under that personal property limit. Again, this is another one that some people say, there's absolutely no way that I have this much in personal property. Maybe you're a first-time home buyer. Maybe you just choose not to have a lot of furniture or furnishings, and that's fine as well. This is something that can be totally customized. You're not stuck with this 50% of personal property. A lot of times it is really hard to put a value on your personal property. The good thing is when you're moving, if you're buying a new house, that tends to be a really good time to take inventory of that. One suggestion that I always like to give clients is, when we purchased our first home or moved in, we were newly married. So we had a wedding registry. That was essentially all we owned. What I did was I just took a printout of that, took some pictures of that. That's backed up in the cloud because that is every fork, every spoon, every knife, every plate. A lot of our furniture is on there. A good thing too is to take pictures of your house. Again, just moving in, that's a great time to do that. Have those pictures backed up somewhere, because if you do have a situation where you have to make a claim, it's a lot easier if you do have photos to look back on. It'll help jog your memory. Even, opening a drawer and taking pictures of the clothing that's in your drawer, that will help kind of prompt you. If you do have a serious situation like a fire or a tornado where your contents really aren't there to be valued by an adjuster, that's a really great way to have that backup of what you actually had. So again, personal property does not have to stay at 50%. This is a great way to control your annual premium. To the right of that, you're going to see the loss of use coverage. This amount is initially defaulting as 20% of your dwelling value. And this is the amount of coverage that you would have to live elsewhere if your home were being repaired after a covered loss. So if you had a fire, if there were significant smoke damage, let's say there's a wind or hail situation and you've got water damage inside of the home and then there's mold. If for some reason you can't live in the home while it's being repaired, your homeowner's policy will pay for you to rent another home in the area through your loss of use coverage. This is one that you really want to be careful with. You don't want this number to be too low. I know sometimes you may look at this and think, 84,600, if I take my mortgage and divide it by 12, if I'm out of pocket for this many months. But one thing that's important to remember, if we do have widespread damage, the cost of renting another home will increase pretty significantly just due to supply and demand. And a lot of that we're going to be talking about on this homeowner's policy. So I never recommend going below this 20% amount. You can absolutely increase it as well. But that's another coverage that you can adjust here. To the right of that, you're going to see your personal liability amount per occurrence. Our agency always quotes at $300,000 for liability. You'll find that liability coverage is very inexpensive on a homeowner's policy. Where you're going to see the majority of your annual premium come from is anything that has to do with wind or hail, just because of where we're located. So your dwelling, your other structures, your personal property, and your loss of use, your majority of your premium is coming from those four limits there. Liability, very inexpensive. This is going to apply if you're named in a lawsuit for something that happens on or even off of your property. So anything from somebody, being injured at your home to if you're playing golf on a golf course and, you swing a ball and you end up hitting somebody like down the course and they have injuries, that's also going to apply to your liability coverage. Your homeowner's policy liability will follow you wherever you go and essentially cover any liability that's not covered by your auto insurance. Another example, New Orleans is super litigious. This seems like a silly example, but it's a real one. I had a client who was in Costco shopping. She accidentally tapped into the back of somebody with her basket because she was looking at the aisle or something like that. That person decided to sue her for ankle injuries and things that ensued from that. In that particular case, her liability coverage covered that. Attorney's fees are all covered outside of your limit of liability as well. So even if it's a frivolous lawsuit and it may cost $20,000 to defend you, that's all covered, not dipping into that $300,000 limit. Your medical payments are quoted at $5,000 per person per accident. The difference between medical payments and liability is that you do not have to be at fault for your medical payments to apply. It's considered a goodwill payment. So a good example would be, if you have people coming over and somebody trips down your front porch steps, trips off of a back balcony, if they have smaller injuries, your medical payments will provide up to $5,000 per person per accident. That's sort of in the hopes that that takes care of any small medical bills. And that way they don't end up suing you and dipping into that $300,000 liability limit there. That's going to be the general overview of how your coverages work. And that's a standard homeowners policy. One way I like to quote it is with all of the optional coverages that a carrier offers, because I don't ever want to assume that someone may not want anything additional. So when I'm working on something, I'm going to put all of the bells and whistles on there. I'm going to walk a client through this and I'm going to say, look, let me know if you want these or you don't. We can remove these and it'll reduce your overall annual premium. So if you're looking at this optional coverage section here, these are already included in this annual premium. The first one that you're going to see is called additional amounts of insurance of 25%. And what this does is it actually gives a client 25% more coverage on top of their dwelling limit. So in this particular case, rather than having $423,000 on the dwelling, she actually has up to $528,750. This is important because if we do have widespread damage, the cost of building material and labor can increase pretty significantly. So this is just going to provide a buffer in that type of situation. Again, we're always going to insure the home for 100% of that replacement cost here with that true replacement cost estimator determined. Then you can add this endorsement on top. You really want to be cautious. You don't want somebody to insure the home for 75% and then try to add this back to make you whole. From an insurance standpoint, you have to insure the home to 100% of its rebuild cost. And that's just because you think about insurance, we're all in this insurance pool together. If everybody's only insuring their home for 70, 75%, if we have a loss, there's not enough premium and money to go around for claim payment. So that's something that can be added if your home is already insured to the 100%. The next one that you're going to see there is called equipment breakdown insurance. And what this is doing is it's providing $100,000 of coverage for any equipment that's servicing the building. So it's always important to note on homeowners policy, your coverage is for any sudden and accidental loss. You're never going to have any coverage for wear and tear. If you have a situation like your foundation is failing and you're seeing cracks in the home, that's something that's gradual and happens over time. That's not something that would be covered. Homeowners policy is going to cover something abrupt, sudden, and accidental. So in this particular case, as far as equipment breakdown goes, this is going to give you that coverage if you have any equipment servicing the home that has a mechanical breakdown. Something like a rupture or a bursting that's caused by force. If you have an AC system that's maybe being overworked because it's 100 degrees at summertime and all of a sudden a condenser coil cracks and the unit goes bad. That's the type of thing that would be covered on an equipment breakdown endorsement. Any sort of electrical arcing, if you have your power goes out suddenly and you have damage to that equipment, your appliances, it's going to cover anything servicing the dwelling. So this is pretty important. And honestly, the cost of this coverage is maybe $40 to $50 for the year, just depending on the carrier. So it's something I always recommend. It's different from a home warranty because again, a home warranty may give you some of that wear and tear coverage. This is strictly just going to be for mechanical breakdown that's sudden and accidental. Below that, you're going to see the water and sewer backup coverage, which I always quote at $25,000, which is typically the maximum offered. This is going to provide you coverage for any type of scenario where you have plumbing that's backing up into the home. Sometimes if we have minor street flooding, the city's lines, like their main plumbing lines, if they're submerged, they tend to back up inside of homes, overflow things like toilets, sinks, drains. In this particular case, you would have $25,000 of coverage for any damage for that. So if you're thinking of that type of scenario and you have damage to your flooring, to your sheetrock, here you'd have $25,000 of coverage for that. One thing to kind of consider, you can install some sort of like backwater prevention valve. There are a lot of things recently that have come on the market because water damage is a huge issue for homeowners policies. That's definitely something that we like to talk to our clients about. You know, when you're purchasing a home, you want to look for any pre-existing drainage system issues. You want to look to see, you know, does this property have a lot of trees where the roots may be intertwined in this underground plumbing? Those are scenarios that can cause water backup. In addition to, you know, that minor street flooding that would push it up through the pipes. So always something to kind of pay attention to when you're looking at a new home or looking at that scenario for your house. Your service line coverage beneath the water backup, this is quoted at $10,000. And what this is it's providing coverage for the service line that comes from the city's main lines to your house specifically. So things like underground plumbing, underground gas lines, electric. If for any reason you're responsible for repairing those service lines after any sort of like sudden and accidental damage, if it's not the city's responsibility, if it's your part of that line, you have $10,000 of coverage quoted here on the policy. Another optional coverages that I always include is that identity fraud coverage of $25,000. This is becoming a lot more popular. You also tend to have this through a bank or a credit card. It's not going to proactively monitor credit. So if you have something like LifeLock, this wouldn't be necessary, but identity fraud coverage is going to provide up to $25,000 if you do end up with identity fraud and you have to go through that process of restoring it. So this is also included on here as well. Personal injury coverage is included as well. What this does is this is broadening your $300,000 of liability coverage to account for things like libel and slander. A lot of times when I explain that to people, they laugh at me, but important to know that with everything online, blogging, Facebook, even, you know, kids living in your household that are between the age of, you know, 10 and 16 who maybe are on these platforms, this is really important for a family that is active on social media, because in these days in New Orleans, we're so litigious here. If you're sued for libel, slander, defamation, something like that, this would provide you with that adequate defense coverage and up to $300,000 of liability. So those are some of the optional coverages. Those are pretty standard that we'd have with any insurance company that we'd want to add back. And again, all of those can be removed. Some of these can be reduced. The limits can be adjusted a little bit, totally up to, you know, you and your agent to have that conversation. If you look to the left there, you'll see that deductibles chart in bold. There are a couple of different deductibles that are applied to the policy. These are customizable as well with most insurance companies. So the first one that you're going to see is a hurricane deductible. This is 2% of coverage A, so 2% of your dwelling limit of the 423. That's where the 8,460 comes from. And this is a hurricane deductible. Very important to note, hurricane is different from named storm, is different from wind, hail. The most favorable deductible to have is a hurricane deductible because it's going to apply least amount of times throughout the year. Also important to note, depending on the carrier, your hurricane deductible can be per calendar year, which is also the most favorable. In this particular case, this is a hurricane calendar year deductible. So that means if we're really unlucky and we have several hurricanes that damage a home, you only have to meet that hurricane deductible one time in the calendar year. You might have a policy where that hurricane deductible is per occurrence, which means every time you have damage from a hurricane, you're meeting that higher deductible. You may have a named storm deductible rather than a hurricane. Named storm is less favorable than hurricane because it's going to apply more frequently. You know, whatever's in the Gulf right now, if that's developing and that ends up hitting as a named storm, you know, then you might have that higher deductible applying for that as well. In this particular case, she just has a hurricane deductible. So she's only worried about that higher amount if she does have damage from a hurricane. And again, in this case, it's calendar year. You'll see the all other perils deductible below that. And in this adjust it however you see fit. And this is really a personal preference. Your all other perils deductible is going to apply for anything other than a hurricane. So if you have wind or hail damage, if you have named storm damage, fire, theft, lightning, smoke, anything other than a hurricane, you'd end up paying your all other perils deductible here. Typically on a higher value home, people tend to take higher deductibles because the higher the deductible, the lower the annual premium. And that's just because you're retaining more of that loss. So if we were to reduce her deductible from $5,000 to $2,500, her overall annual premium would be increasing as well. Just another way to kind of curb that premium and customize it to where you need it to be. And then you're going to see here, there's an equipment breakdown deductible and a water backup deductible of $500. These are corresponding with these optional coverages on the right here. So if she chose to remove equipment breakdown and water backup, these deductibles obviously would go away because she wouldn't have those optional coverages on here. So that, again, that's an overview of your standard coverage limits, of some optional coverages that are available, and of the deductibles. All of these are playing a part in that overall annual premium. And some other things to consider when you're looking at what's contributing to that premium is going to be some other factors that are determining that. The age of the house, obviously the older the home, typically the more expensive the premium, but as long as a home has been updated and maintained as far as electric, plumbing, and heating go, there really is not going to be too big of a difference from a house built in 1920 to a house built a couple years ago, as long as the roof is in good condition. That is a huge factor where we're located. And one thing that we're seeing a lot of right now, most of the roofs that are on these houses were replaced after Katrina. So we're looking at 15-year-old roofs, and a lot of them are at their lifetime capacity. I know they're called 25 or 30-year roofs, but unfortunately, with our weather here, our humidity, our heat, our roofs deteriorate a lot quicker than they do in other states and other places. And a lot of insurance carriers are very particular on the condition of the roof. So I would say the main determining factor in a homeowner's premium is the age of the roof. The roof shape also provides certain credits. So if you have a roof shape that's, like this, like an A shape, a gable, that's less favorable than a hip roof, which a hip roof would slope down on all sides of the home. A hip roof is going to give you additional credits on your policy. And then the type of roof as well. So, prior to Katrina, a lot of roofs were that 3-tab asphalt shingle where the shingles kind of laid next to one another. Those tend to have less of a lifespan than architectural shingle. Architectural shingle are going to be your shingles that are overlapping one another. And those tend to last, 7 to 15 years longer than that 3-tab asphalt. So we're seeing a lot of roof replacements with architectural just because they have that longer life, and they're also offering additional credits on homeowners policies for that. Some other things that are going to determine your homeowner's premium, your credit score. It's based on an insurance score. So anytime somebody's working on homeowners quotes for you, you're not going to see a hit to your credit or even a soft hit. What it does is it's just triangulating an insurance score based on your date of birth, your prior address, and your social. Obviously, if you have a client who's had no claims in their history of home ownership, or if they have act of God claims like weather claims, that's rated more favorably than somebody who's had 2 theft claims and a water damage claim. So that's all factored in as well. A lot of times people will call and say, hey, the realtor will call, hey, I need a quote for homeowners. I go through the spiel like, okay, it's not just a quote for homeowners. A lot of factors are going into this, but also 2 buyers looking at the same exact house could have very different homeowners premiums. And that again is based on that insurance score. And then just like we talked about adjusting your other structures, your personal property, your loss of use, and those optional endorsements, that's going to play into that premium as well. So does anybody have any specific questions on homeowners before we move to flood? I want to make sure I can answer all of that if you do.
So for anyone who does have questions, if you want to type them in through your Q&A box on the bottom, I can read them out to Alyssa and make sure that they are answered. If you have questions that sort of come up later about your homeowner's policy, and you think of them while she's doing the flood insurance section of everything, feel free to put them in there, and we'll have another Q&A section later. So no need to worry if you haven't thought of your questions just yet, but I'll give it another second if anyone does have any questions. All right, Alyssa, it looks like nobody's thought of anything just yet to ask,
Okay.
so let's move forward. And again, if anyone has any questions, put them in the Q&A box, and you can chat me if you need anything else. Thanks, Alyssa.
Okay, perfect. So now that we've talked about homeowners, the other thing that I want to talk about is flood insurance, because typically, as long as you got your home insurance policy and your flood insurance policy, you're adequately covered for your structure. One thing that's important to note is flood insurance is going to cover rising water. So situations that would be covered, obviously Katrina, a levee breach. If you've got significant water coming from a place, it's rising in the street and entering your home, your flood policy will respond. If you have significant rainfall that's entering the home, rising in the street, if you have a sewage and water board has a pipe bust and water is rising in the street, that's going to be the key for your flood insurance policy to respond. If it's any other type of water loss, roof damage, wind or hail, glass breaks and water is entering, that's going to fall under the homeowner's policy, because what caused that water to enter was the wind or the hail or the glass breakage. So I like to explain that. A lot of people are confused. If your washer machine is overflowing in your house, that's not going to be your flood insurance policy. That coverage would be afforded under your homeowner's policy, just depending on that cause of loss. Another thing too, I should have touched on this a little bit more. As far as your homeowner's policy goes, I know we said sudden and accidental damage. It's going to be all of those weather related type things: wind, hail, tornadoes, fire, any lightning damage. If a car, strikes your home and damages your home, if there's something falling from the sky, and hitting the home, those are all covered under the homeowner's policy. Your homeowner's policy, if it's on a true HO3 form, is going to provide you coverage on your dwelling for anything that's not excluded. So the typical exclusions in that are flood, which is why you need your separate flood policy, earthquake or any type of earth movement. Places like California and a lot of other places, it's common for them to purchase earthquake coverage, just like we're purchasing flood coverage here. Some companies do offer earthquake here. I don't know that I have a single client that's ever purchased it, but it's something that we always talk about, because if that happens, that's excluded on a home policy. And then the other common homeowners policy exclusions are going to be, your standard wear and tear is never going to be covered. Over time, settling of a building is not covered. And then intentional damage and any damage from animals. So also important, where we're living, termites, not covered. Any type of vermin or pest that's, eating the home or destroying the home, that's never going to be covered under homeowner's policy. So you want to make sure you're keeping up termite contracts and everything that you need to do to maintain that. So back to the flood insurance portion, this is going to be rising water coverage. And unlike your homeowner's policy, your flood rates are set by the government. This is all set through the National Flood Insurance Program, which is run by FEMA. Congress adjusts these rates. They're the ones that are always looking at this. In 2016, we did have a big map change in Orleans Parish, where a lot of the flood maps were improved. A lot of the areas were improved. Some of the areas did become a little bit worse, but because of our levee protection, a lot of it did have some improvements there. One thing that I always like to point out when people are purchasing a home, obviously everybody knows about an X zone. Everybody always wants to know, is this in an X zone? Is this in an X zone? So kind of a breakdown on flood insurance. Everyone is in a flood zone. Every single house, every property across the country is in a flood zone. Some just have a less chance of flooding than others. That being said, when you're purchasing a home or you're looking for your flood zone, as of recently, a lot of people like to go on the LSU Ag Center. They have flood maps that are accessible for anybody. You can go on, you can search a property address. I always caution people when using this because they're not always accurate. So I wanted to show you an example of why you can't truly rely on these ag maps. So if you're looking to the left here, or I'm sorry, I'm looking to the left at my screen, but if you're looking at the screen here, this is an example of a flood map. And for a flood zone that I was recently looking at for a client. So all of the area in orange is a preferred flood zone, meaning that the premiums are less expensive. Flood insurance is not required by a lender. The red areas are special flood hazard areas. They have more of a chance of flooding. There's some additional documentation required to bind a flood policy. The lender will always require a flood policy in these areas. These have a much higher chance of flooding. Obviously, looking at this, it's super spotty. So these are just, city blocks here. So if you're looking at where this house is located, she was right in the middle of all of this. So the only way to get in a true flood zone determination, you can't look at the Ag Center map and feel that it's reliable. You have to have an agent run what's called a flood zone determination. And that's where we go into the flood carrier website, we enter the property information, and we submit that to be reviewed by underwriting. And then something like this will come back. So unfortunately, the top here has the basic information. She is not in a preferred flood zone based on where her house is located. What they will end up doing is if it's really spotty and it's just really hard to determine, as to what part of the city block her house is in, they'll do an overlay, which is when they take a satellite view of the home and they basically put this map over that satellite view. And they can see exactly where the shape of the building falls in that flood zone. So if for some reason just the front lawn is in the less preferable flood zone and the structure itself is fine, they'll go ahead and allow you to rate it in that preferred flood zone. So it really just depends if you have somebody that's super spotty and maybe just this area. This is also another reason when people are purchasing houses and they're looking, they might say like, hey, I want to buy in an area that has an X flood zone, where would that be? It's nearly totally unpredictable because there's not a single city that falls within one specific flood zone. So again, I always like to point that out, very, very spotty. Don't ever rely on what you see on just like a generic flood map. You want to make sure you discuss that with an agent who's had that verified. That being said, as far as flood insurance goes, because it is set by the government, currently, the maximum amount of coverage you can get on the dwelling itself is up to $250,000 with up to $100,000 in personal property coverage. So the example that we were just looking at, her home was $423,000. The most she can obtain for flood insurance is $250,000 on the building and $100,000 of contents. In a situation like that, that's the most the lender can ever require as well. But there are options for excess flood coverage. A lot of our clients tend to purchase that because a lot of us have been through Katrina. If you have water up to your roof and your home was $480,000, $250 isn't going to go very far. So in that particular case, you can look to excess flood markets to buy that additional flood insurance that you need. The maximum that's ever going to be required and the maximum currently available through the NFIP is $250,000 on the building and $100,000 on contents. And that's for the main structure itself. Separate buildings, so if they're separated by a roof line, separate buildings are going to require their own flood insurance policy unless you have a detached garage that is truly just used for parking. If you've got your home here and you have a detached garage and you just park your car in it, part of your $250,000 up to 10% can extend to that. It's not in addition to the $250,000. It's just a part of that $250,000 up to $25,000 can be used to replace or rebuild your garage. But anything other than that, if you have a pool house, if you have a shed that's built permanently on foundation, if you have a man cave detached, anything that is not used for parking, that is detached from the home, a separate flood policy would be required to give you adequate coverage. Separate flood policies are very, very expensive. It's important to note that the NFIP has a lot of fees that are on separate flood insurance policies, so they're almost unaffordable, but we absolutely can quote them for you. So if you have the pool house in the backyard, it can be quoted. You want to make sure you have a separate policy for it if it's valuable enough to you. That being said, we'll talk a little bit about the difference in flood zones. So B, C, and X, those are considered your preferred flood zones. Around here in New Orleans, we're mainly going to see X. You see B and C more on the North Shore. They're all the least amount of flooding percentage in a year. So those are your preferred flood zones. It's important to note that in that flood zone, if you've had prior flooding on that house and made more than 2 flood claims in a 10-year period, regardless of ownership. So if there was a Katrina flood claim, the home was sold, and then 4 years later, Sewage and Water Board had an issue and the home flooded again, and there was a flood claim 2 times within a 10-year period, regardless of ownership, that home is no longer eligible for that preferred flood zone rate, which is currently $516. That ends up being a standard rate, which is around $2,200. So a very, very big difference. And why I always, again, caution people, don't rely on that LSU ag map for your flood zone, because even if it's going to tell you that you're in an X zone, you're not going to know that you have the preferred rate or the standard rate until an agent actually starts running that quote in the system, and it will pull up that prior flooding history and tell you, is it eligible for the $516 rate, or have there been those 2 flood claims and it's kicked out of that altogether? I would say 90% of the time when we're looking at an X flood zone in New Orleans, it's normally fine with that preferred flood rate of this $516. About 10% of the time, you see it's an X flood zone and you go to run the quote and it tells you it's not eligible for the preferred rate because there have been more than 2 flood claims within that 10-year period. So definitely something to keep in mind there. The tricky flood zones are going to be anything other than B, C, or X. So basically A and AE, where we're located here. Those are the more common ones. In these particular zones, you're going to want to have what's called an elevation certificate to figure out your actuarial premium for the property. So what that means, here's an example of an elevation certificate here. You're going to see it specific to the property location, and there's a building diagram number. This building diagram number is going to correspond with the foundation itself. So a 1A means that the home is on a slab. If the home were raised, it'd be a diagram 5, a different diagram number. So you're looking for all of this information here. You're looking for that base flood elevation, which has been established in that specific flood zone. So basically in this particular case, this house needs to be at a -4 elevation or higher for the home to have what I would consider to be an affordable flood insurance rate. You tend to see really expensive flood insurance premiums on homes that were built prior to 1974. And the reason for that is because prior to 1974, there wasn't a code or ordinance where you had to build at a certain height or higher. So a lot of these houses, they were just built at whatever height, whether it was a Broadmoor type house that has the walkout basement, as we'd call it, where you enter on the 2nd floor and the bottom's closed in, or if it's just a matter of where they built the house. Those houses built before 74 always tend to be a problem. If a home was built after 74, you're almost always going to see an affordable flood insurance premium for it because it had to be built to code. So it had to be built at the base flood elevation or higher. In this particular case, this base flood elevation is a -4, meaning that the top of the bottom floor for this house needs to be better than a -4. In this particular case, it's going to show us all of this information, this rating information here. The top of the bottom floor here is -2.9. Gets a little bit confusing because we're dealing with negative numbers, but in this case, this is okay because this is about a foot higher than the base flood elevation where it needs to be. So this flood insurance premium is going to be pretty favorable. It tells you where her second floor is located. It tells you the attached garage, the machinery and equipment. All of these things are factored into this flood insurance quote here.
Alyssa, can you explain the negative numbers a little bit more? Can you sort of translate those into sort of real speak so people know what they're meaning?
So I was trying to find actually an elevation certificate that would have positive elevations. This is because we're located below sea level here, this -4. If we were on the North Shore or if we were in Baton Rouge, this number would be something like 15. So I know it definitely does get confusing because we're dealing with negative numbers to start with, and then we're talking about a home being higher than that. So kind of just imagine like if you just called this number 0, that's where you want to be, there and higher. In her particular case, like again, confusing, -2.9 is higher than -4. So she's a foot above where she needs to be. Really, it'd be like talking about if this base flood elevation were 0 and she was at a 1, she's a foot above where she needs to be. So I know the negative numbers can really throw it off. It took me a long time to get used to that when looking at these certificates, because initially you might see this and freak out and think your home is below where it needs to be. But truthfully, -2.9 is more favorable than the -4 where she needs to be. So she's a foot above. And these are the numbers that are all factored in when you're looking at a specific location. So these elevation certificates are specific to your home itself. A lot of times people will say, well, I don't have an elevation certificate. I don't know if I should get an elevation certificate. My neighbor is paying this. Unfortunately, my neighbor is paying this is not a good and adequate guideline, just because if your neighbor could have a sunken sunroom, and that's the type of thing that I'd find out using this elevation certificate here. So basically, the higher the home, the better the flood premium in these zones, unless you have any enclosures underneath. That's when that would trigger, a higher flood insurance premium, like the walkout basement example that I just gave. Or if you've had several flood claims. If you have several flood claims, the Amazon delivery guy is here, so my dog might bark in a second. Okay, she's good. Sorry about that. If you've had several flood claims on the home could be put in the severe repetitive loss program, which could also negatively affect the rate as well. So I know flood insurance can be totally, over everyone's head. It's important to work with somebody who understands it, who can kind of break it down for you. It's hard to give a generic picture on it without having photos of a home and a specific elevation to kind of teach you about this area that may be raising your premium or something like that. But the good thing is there's normally a way to kind of curb that premium, just like we talked about on the homeowners. It's not with optional endorsements because the flood premium kind of is what it is. But I'll show you a flood quote here where you're dealing with the maximum building and the maximum contents coverage. The deductibles are a way to change this. So this is a scary flood premium. This is a house that was built in 1920. Somebody enclosed the bottom of it way down the road without a permit. So it's astronomically high because it's 2 feet below where it needs to be. Basically, it's saying it's going to flood at minimum of 2 feet if the city starts flooding. So your $250,000 of coverage on your building and your $100,000 of contents. You can adjust the deductibles here. You can also adjust the amounts. So if it's a smaller home and you only need $180,000 of building and you only need $10,000 of contents, you can adjust what you need on that. So that can customize your flood premium as well as your deductibles. This is going to be the annual premium corresponding to these limits. Page 3 of the quote is going to show you many different building deductible limits, many different contents deductible limits, and their corresponding premiums. So you can see if they're going to take the lowest deductibles, the premium is $5,144. They're going to tend to take higher deductibles. They can reduce that to $3,182. So that's really the only way that you can play with the flood insurance premium is by changing the coverage limits and by changing the deductible amounts. Unfortunately, it doesn't matter if you have amazing credit or you have a certain roof shape. This is the only way to kind of factor in any adjustments on your flood insurance premium. So I know, again, that was a lot. Flood insurance is pretty overwhelming and complicated. I just wanted to make sure I did kind of a basic walkthrough of that So that's the end of my flood insurance spiel as well. If y'all have any specific questions or you need some more information for me to clarify on that, please let me know. I'm happy to make some more sense of it for you.
Yeah, if anyone has any questions, please feel free to write them in the chat or the Q&A for us. Alyssa, that was super helpful. I know that flood insurance can be really complicated, and it is helpful to know about those flood maps. Is there any user resource for finding out more about a flood zone without actually getting a quote? So I know that a lot of people talk to us about looking at houses and sort of not, and a lot of them are in neighborhoods where they it could go either way. And they sort of want to know a little bit more about that before they maybe put an offer in. Is there any way to find out more about that without getting the actual quote from an insurance agent?
Unfortunately not. You can look at the disclosure, but I would say that the disclosures tend to be sort of incorrect. I never mind running flood zone determinations for a client who's about to put in an offer or anything like that. So if you're considering a couple of houses or you just need some guidance, I'm not paid by a fee or anything like that. The way that most insurance agents are compensated is when you write a policy, that agency or that carrier ends up paying your agency and you're paid by your agency. So if you do have questions, you just need somebody to kind of talk it through with you, ask for guidance, you can always call me, you can contact me. You're not going to be charged a fee or anything like that. I'm happy to kind of walk you through it. And then when you get to that process and you do actually need quotes or you do need to buy new coverage, would love to help you in that situation. So don't feel like you have nobody to ask. Even if you do, or if you're trying to decide between 2 or 3 properties, I can definitely give you the guidance on that. Don't feel like you're bothering me. A simple email or a text or call, it's very easy for me to run these flood zone determinations and to give you that information.
Thank you. Another question is there any way for someone to change their zone so you can raise the house, right? Is it possible to change the grading on your property and change the zone that you're in?
So it's not possible to change the zone because that's set by the city when they update the flood maps, but it is possible to change the grading or to change the factors on that elevation certificate that are negatively affecting the premium. So you can do things to mitigate that. Raising the house is an easy answer that's not affordable normally. Funny, my family owns Avery Brothers Raising Insurance. It's like our 5-generation business. And I know it's not cheap to raise a house. But doing things specific to the home like that, maybe you just need to raise your AC equipment or your mechanical equipment, and that's what's negatively affecting that flood insurance premium. There are things to do within your flood zone. Unfortunately, you can't change your flood zone unless the city changes the zone itself. But the factors that are contributing to your premium, you do have a little bit of control over.
So is there any, can you change the grading on your property then and address will that impact your elevation certificate?
Typically, you have to adjust your grading and the level of your bottom floor. They're working together. So if you're just going to adjust your grading, your house still may be sitting below that base flood elevation, and you would have to raise your actual living area in addition to adjusting your grading. Normally, it's not as simple as just adjusting the grading.
Okay, next question is what happens when there is a house that has 2 separate levels for the bottom of their first floor? So I imagine that this is sort of in the situation where maybe you had a raised basement and part of it has living space and part of it doesn't. Does the amount of square footage that is below BFE impact your rates?
Yes. So actually 2 different answers to this. You can have a split level building where, part of your living floor is here and then maybe you have a raised section and the remainder is here. They're always going to rate from the lowest living floor area. So if there was a situation where this was minimal square footage and it really wasn't a room that was used often, you may want to talk to somebody and do adequate flood venting, which just means that unfortunately you have to remove the sheetrock on your walls to make it unfinished, add some flood vents, and then you'd rate from that next higher level. That's not normally a scenario that people like, because usually you don't want to lose that living square footage. If you're in a situation like that, though, I had a house recently where the majority of the home was fine at living area. It was a raised home. Then they added on a bathroom, like an outdoor pool bathroom that was on a slab. So that was maybe only 15 square feet. The NFIP can rate for just that 15 square feet that's below. So it is important. That becomes a submit for rate. It's a little bit more complicated, and underwriter is involved, but they are going to be fair and realize that only 15 square feet of this is underneath the base lot elevation, and they're going to charge it appropriately, and it will be more affordable than if the entire structure was 2 feet below or at that same level.
Great, thank you. I don't see any other questions coming in. Does anyone have any other questions about insurance while we have Alyssa here? Well, I think you've made this very simple for everyone to understand. So thank you, Alyssa. This has been hugely helpful. And to everyone who is listening, if you do think of questions later, let us know. We can put you in touch with Alyssa and get you the information that you need. The PRC is here to be a resource for you and your historic home. So if you have any questions, not only about insurance, but just about how to maintain your home, how to love your home, how to learn about your home, contact the PRC. You can email me at smohan@prcno.org. Visit prcno.org, visit our website. We have all sorts of resources. We've archived our online classes and the videos, so you can access them through our website. So to learn more about your home and how to care for it, please check those out, watch all the videos. And when you have questions, come to the PRC. We want to help. Alyssa, thank you so much for doing this today. We really appreciate it, and we'll see you soon.
All right. Bye, everyone. Thank you.
Bye.